56% of all corporate Bitcoin buys happen in the last few months. I just can't see the stair step up. The thing that's most likely to happen is what inflicts the most pain on the most number of people. We're reaching corporate FOMO, we're going to get nation state FOMO, and then retail FOMO. And all of that's going to mean a very steep adoption curve. I think we hit hyperbitcoinization somewhere at 0.5 million a coin, and we start devaluing gold or demonetizing gold and real estate, which are both massive chunks of the global wealth.
Samson begins by addressing a simple human truth. People are trying to protect their savings. In regions where inflation is rampant and local currencies collapse, citizens aren't chasing speculative profits. They're just trying to preserve value. For many in Latin America, the US dollar is that lifeline. But physical cash is scarce, and banks can't serve everyone. This leaves billions globally unbanked, shut out from reliable money.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
People are seeking to protect themselves and protect their savings. And they're just looking for a dollar, a digital dollar, and they don't really care what it is. If it is on a blockchain, that's great, but they need to be able to access it. And much of LATAM can't access dollars. There's not enough physical cash supply, and the banks, obviously are a bottleneck too, because they cannot bank everybody. That's why we have a few billion people in the world unbanked. So Tether, USDT is like a godsend for people in LATAM that are seeing their savings eroded. So they naturally just seek it out and they start using it. And unfortunately, the bulk of it is on altcoin chains. Well, I think the rapid repricing is just waiting right now to happen. You have the ETFs, which eliminate all the barriers to Bitcoin acquisition. In previous cycles, you always had a bottleneck with exchanges onboarding people and companies, right? They would just get bottlenecked for months. But with the ETFs, that bottleneck is gone. It's just money will flow in anytime. It's like a portal to TradFi money. And then you have the demand from all the corporations. You have nation states starting to line up and go through their own processes to allow for accumulation. So all of that combined with the current financial system and all of the money printing from past decades, more pertinently probably from the last 5 years, is all coming to a head. So even without the big beautiful bill, Bitcoin will explode to the upside. But the big beautiful bill just guarantees it, in fact. So nothing really stops the train, in the words of Lynn Alden. So yeah, I think the big beautiful bill should open some more eyes and accelerate the takeoff or the liftoff of the Bitcoin rocket. Because if you look at what Ray Dalio is posting, 7 trillion a year translates to about 64 million BTC. So 3-ish Bitcoin networks are going to be spent per year. So you can kind of figure out and reason out that Bitcoin is cheap right now at $110,000-ish a coin. 56% of all corporate Bitcoin buys happen in the last few months. So that's not an indication that we're going to stair step up. And if you look at Strategy alone, their acquisition is accelerating. So I just can't see the stair step up. Stair step up is a graceful ascent, and it violates the principle of max pain theory, which is the thing that's most likely to happen is what inflicts the most pain on the most number of people. And that is that everyone misses the boat because they weren't paying attention, or they thought Bitcoin was expensive, or they just thought Bitcoin is going to go away. So stair step up means everyone has time to learn. They're going to watch as it goes up, a little bit every day, gradually for the next 21 years. And that's just unlikely in my book. It seems like we're reaching corporate FOMO, we're going to get nation state FOMO, and then retail FOMO. And all of that's going to mean a very steep adoption curve. I think we hit hyperbitcoinization somewhere at 0.5 million a coin, and we start devaluing gold and or demonetizing gold and real estate, which are both massive chunks of the global wealth. And Bitcoin goes up very quickly to 1 million, 2, 3, and at that point, nobody will take dollars for payment. So you won't be able to buy a TV or a car with fiat money. They'll say, oh, we want Bitcoin. And what it looks like for the average person is that they'll just be paid in sats. So you'll be earning, 20 sats an hour for minimum wage or something like that. Right now, America should buy Bitcoin because it's almost on sale. Like anything under 0.5 million a coin, I would say is a good deal. And I'm just in disbelief that we're still at these prices now, given the amount of just incredible accumulation from all the corporate Bitcoin treasury companies, as well as the telegraphing of plans from nation states to buy. So, if I was the US, I would buy now, especially given the big, beautiful bill passing, and that's just going to increase the debt and deficit.
Samson also raises an important warning. We may be dealing with paper Bitcoin, Bitcoin IOUs that don't actually exist on chain. Just as the FTX scandal revealed fake Bitcoin being sold without reserves, it's possible that some exchanges are quietly engaging in the same practice today. This could suppress prices temporarily by creating artificial supply. Alternatively, some argue that OG whales are selling, but Samson doubts that narrative.
If you look at gold, people were spending gold in history. They would spend it as gold coins and buy shoes with it or bread with it, or like lower derivatives of gold like silver and copper, right? But the main point is you would transact it and spend it, but at the same time, people do hoard it as well. And I think the difference is a bit more pronounced with Bitcoin because it's underpinning much of the financial system now because it has to. Institutions, governments, corporations, they're all looking for a pristine asset that's not going to degrade and devalue over time. So that's why companies like Strategy and others are adding it to their balance sheet, and governments too. But at the same time, you have the rest of the world, which needs money. They need liquid money that can be spent to pay their suppliers, to pay vendors, to move around quickly, in addition to stablecoins too. But they're looking for something to use as money. So both sides are actively pushing both use cases, the medium of exchange and the store of value use case. So I think you'll see it end equilibrium where it does turn out to be both, and it is really good at being both things, and it's not necessarily one or the other. And even if BlackRock and Strategy and others have a large holding of Bitcoin, you're always going to have Bitcoin in the wild and being used by ordinary people to spend and use in their daily life. I think there's probably some dimension of paper Bitcoin involved. There could be something shady happening. We just don't know. And it's the same as in the FTX case where we found out after the fact that they were selling Bitcoin that they didn't have. So it's possible, like some exchange and in some, the lesser known exchange is selling paper Bitcoin. And for some reason, there is not a run on that exchange yet. And that could contribute to this. The other theory is that it's simply OG selling, but I don't know of any OGs that are selling, so it's difficult to really understand exactly what is going on. But I wouldn't rule out the possibility that there is some outright fraud and some exchanges taking advantage of this selling Bitcoin that does not exist. I think it largely has to do with the shifts that we've seen in corporate adoption and the traditional market. So Bitcoin is now far more accessible in traditional stocks, and they have a large lead on tokenized stocks because they're getting easier and easier to trade. The windows of trading times are increasing, and a lot of the more traditional exchanges are looking at ways to tokenize so that they can get fully 24/7 and potentially bearer trading, which I think was the promise of securities, tokenized securities. But yeah, it's interesting to see the route that things have gone. I think Bitfinex Securities has played a large role in driving the tokenized securities narrative, and most of their offerings are on the Liquid network. And in fact, I think almost all of them are. But I believe we're lacking some larger issuances that can drive more attention, because it's like tokenized securities are the worst of both worlds. You have to deal with the bearer aspect of it, and you have less liquidity than the traditional market. So there has to be some big draw to it. And originally I was thinking Bitcoin bonds issued by sovereign states could be a big driver, because you'll have a large pool of liquidity if there's a number of bonds issued, like billions of dollars of liquidity, and interest because it is Bitcoin backed. So basically Bitcoin bonds could have been like strategy if they were executed on in 2022 or 2023. But I think that ship has sailed, and a lot of the interest now has shifted over to strategy and its preferred stock offering. So the market for tokenized securities has changed a lot. And then, like you mentioned, you have Robinhood, and they're trying things on Solana and everything like that. But you can see the same thing. They're looking for stocks that people want exposure to, like OpenAI and SpaceX. But I think the key is to find a draw. But I'm still bullish on Liquid for tokenized securities. And I think one thing that could be interesting is tokenization of all the Bitcoin treasury companies, which has already happened. So there's CMSTR, and there is, I think, tokenized H100 as well. I'm not sure about AltBG, but Stoker, which is a Liquid member, they've been working with a large number of companies to tokenize these. So if there is enough demand for exposure to these tokenized stocks, then I think a marketplace like Bitfinex Securities or others could come up and allow for trading of those. So you might see it blow up in the future.
Finally, Samson touches on another emerging frontier, tokenized securities. The idea is to bring stocks, bonds, and other traditional instruments onto blockchain rails, enabling 24/7 trading and bearer-style ownership. Bitfinex Securities, operating on Bitcoin's Liquid network, has been pioneering this space. However, Samson admits tokenized securities are currently the worst of both worlds, less liquid than traditional markets, yet more complex than Bitcoin.